Okay, we're back now with Chamath Palihapitiya from Mojave, California for Virgin Galactic's Investor Day. Joined now by Adam Bain. He's the former Twitter COO and Virgin Galactic board member and investor. Adam, it's good to see you. Why this?
Scott, it's great to see you.
Could have invested in a lot of stuff. Why this one?
Well, it's great to be back on CNBC and probably one of the better backdrops that you've ever had on Halftime Report.
Not going to argue with you on that.
Look, as an investor, I think, one of the things that I always look for are iconic technology-centric businesses. And you can't get any more iconic than Virgin and Richard Branson. And you can't get any more technology-centric than putting people back into space and coming back down again safely. And so from my standpoint, this is a no-brainer because it's such an interesting company. And then as we started looking at the company, just the opportunity for revenue potential here is pretty interesting. There's over 600 people now who have paid money already for their ticket. Chamath and I are two of them. So just it's a really compelling company, a really compelling offering.
Let me ask you, let's broaden the conversation out to just some of the things we've been seeing in the Valley with valuations. And today, the obvious story to ask you guys about is the delay in the WeWork IPO. Chamath, you first. When you see WeWork and what's happened over the last couple of weeks, what's your take?
Well, I think that if you play the narrative of WeWork backwards, it really is a tale of three different things. The first is product market fit, and I think it's undeniable that there is incredible product market fit for people who want flexible workspace. But then the problem starts to get a little bit grayer. The second part of the story is about the business model of trying to make money from that product market fit, and that is very much unclear and pretty dubious. Now, people will say that it can get there in scale. I think that's a little bit TBD. And the profitability, it's still a little bit unclear when you look at its competitors. But all of that you can probably overcome. The thing you can't overcome is the third part of the story, which is that it is really a tale of pretty failed governance and almost of the highest order, short of something fraudulent. And that's really quite a shame and something that I think we really have to address as an industry if we're going to have credibility with the public markets.
Safe to say, Chamath, you wouldn't be investing in WeWork?
Well, I think that if I were investing in a business like that, I would want to see levels of control where there's fiduciary responsibility on behalf of the executive team and the board and the investor base. And in the absence of that as a public market investor, I feel I'm making a bet that has too much risk for not enough return. So from my perspective, I'm sort of watching from the sidelines.
Yeah. I mean, Adam, I wonder if you agree. I mean, when you were at Twitter, it's not like you had the same level of governance scrutiny, obviously, but you've been with a young public company that had to endure investor scrutiny. So I'm wondering if you can sort of opine on that and what you see from the WeWork situation. What's your takeaway from that?
Well, my big takeaway is that the news today just means that the market conditions weren't right for elevated consciousness. So, look, I think this isn't a technology company when it's all said and done. Yes, they have technology customers who come in and use the service, but in that way, so does LaCroix sparkling water. Both are not technology companies. So I think this is a real estate company. It's got an interesting comp, a profitable company that's been around for a while. It's got about a $3.5 billion market cap. It's IWC. And I think that, when investors took a step back and looked at you're paying for a huge amount of growth at WeWork, which it's certainly delivering on, but it looks like they're pouring money into the funnel and not getting it out in terms of returns yet.
Chamath, at some level, go ahead. I'm sorry.
The one thing I would say, the one other thing that I would say is what Chamath touched on, which is it is interesting. This is probably one name where the investors and the customers are so far in disagreement. When you talk to customers at WeWork, they actually love the product. And so to Chamath's point, they do have product market fit from a customer standpoint. The investors, the public market investors so far, have begun to speak out, both around things like governance and the like.
It's an interesting thought. Chamath, I'm wondering at some level if you think what we've witnessed with WeWork is in the context of whether the market itself is so overvalued out in the Valley, if this is the way it's supposed to work, that it's actually good that there was so much scrutiny about this before the company went to the public market, that it's the public market investors who maybe in this case are not going to be left holding the bag because the market has already shaken this thing out.
In fact, I think it is actually a very good thing what happened, and I think it allows us to actually see technology investing in private companies for what it is, which is a popularity contest, essentially, at the end of the day. When there's so much money to be put to work by so many different pools of capital, at the end of the day, founders can pick the people who are willing to basically give them exactly what they want. And what they don't generally want is the truth and sometimes really tough advice and sometimes really tough guardrails. And so in those kinds of environments, VCs only win based on their ability to be popular in the eyes of a founder. And so it's pretty natural that you would have seen a decaying of governance in the last 5 or 6 years as the amount of money going into venture has essentially quadrupled or quintupled. So really the thing we have to ask ourselves is, what did we expect to happen? Well, this is probably what was going to happen anyways. And now the question is, how can you course correct? And if you cannot, as you said, it's really up to the public markets to draw a hard line in the sand and say, enough, no more.